What's up guys, Americano back here with another video. In this video, I'm going to present to you every single bearish chart I can find, as well as every single bullish chart. I'll walk you through these charts, exactly what they mean, and let you guys come to your own conclusions about this market. With that being said, let's go ahead and dive straight in. Alright guys, I am going to make this video. I'm going to try to be unbiased in my tone and how I'm speaking about these things. You guys should know how I feel about the market currently. You guys should know where I stand and where I continue to stand. So I will try to keep most of my opinions out of this specific video. But as we're going through, I will be explaining exactly what these charts mean and hinting at some of the implications. So first up, we have Bitcoin dominance on the monthly time frame. Looking at this here on the momentum chart at the bottom, this is actually my custom momentum indicator. The same would hold true for MACD or something like that. But we actually have crossed into bearish territory on the monthly time frame. This is yet to be confirmed, but something we have talked about for a long time is this declining momentum and how strong these higher time frame charts are, looking to past cycles as well. And if I do want to go ahead and drop Bitcoin's chart up on here so you guys can see, move this down, you can see obviously once we have had a declining Bitcoin dominance or negative flipped Bitcoin dominance, this has actually historically marked good times in the cycle. This is not something that we typically see in a bear market. Okay, this is one of the early indications for me. Obviously, I've gone a lot deeper on that into actually some macroeconomics, into some more macro charts outside of crypto market to try to prove points along these lines. But what I do want to show here is that we have not seen this ever happen in a bear market. Do with that information what you wish, but that is just exactly what it means. I should have mentioned before we started this, I'm going to go through the bullish charts first, more bullish charts first, and then we will cover the bearish charts towards the end. I'm sure you guys have gotten bombarded with bearish charts and things like that. So yeah, we'll go ahead and start here. Next up, and in a similar situation, is we have ETH BTC. Similar chart as last time, or similar chart to Bitcoin dominance, I should say. Rising momentum on the monthly time frame. Don't know why my arrow is drawing so sloppy in there. But anywho, rising momentum on the monthly time frame. Chart obviously moving from this more bottoming structure. Here we go. Better chart here. We actually have some more historical data to look at. Momentum is still the same, but same exercise here. We'll go ahead and add Bitcoin's price to the chart. See if we can get any hints as to why this is bullish. All right, we can see that when Ethereum price in Bitcoin, especially when Ethereum price in Bitcoin has been able to get over this line, but once it's bottomed and starts accelerating to the upside, has typically meant good times in the markets. We have not quite crossed into bullish territory, similar to Bitcoin dominance, which has crossed into bearish. But you can see that obviously this thing has been moving in the right direction for quite some time now, getting up almost onto a year in April. That'll be about a year. This is another chart that we don't see in a similar place to where it has been in past bear cycles, right? If we look to, everybody's citing January of 2021, maybe even a little bit below that. I see a lot of people calling for potential capitulation with how low some of these RSIs got and things like that. You can see where we were at the top of this range. When this top came in over here, we were topping out on the higher end of this chart. And as you can see here in 2021, this momentum was rolling over, stark opposite to where we are now. You can also see when we were in these kind of capitulation phases, when we were in these topping phases, we did have a bearish regime on the monthly time frame, something that is not showing up currently. Again, like I said, I'm going to try to remain unbiased, just present these charts for what it is. Like I said, something that we do not see show up in a bear market, something that piqued my interest, this entire pullback, this entire move down as people have been calling for tops, as people have been calling for bear markets and things like that. You guys have seen all these charts before, and we have a ton of charts to cover actually, so I'm trying to move through this rather quickly as to not make this a 45-minute long video. But others BTC, okay, look at times we have gotten crosses. Look at where momentum is currently heading, right? Price at a floor. This is the 886 pullback in there. This is the 886 pullback in here. I presented that in other videos as well. But again, not something that we see show up in a bear market, rather just before euphoric phases of every single other previous cycle, which I find interesting. We don't have momentum going back here, but let's just pick a point where others BTC was potentially bottoming out, whether it be here or here. Can pick a point in here or in here when others BTC was bottoming out. And now we're working through this bottom in here very clearly. You can see when we flipped bullish last cycle into that moment, a lot of move left in the cycle. And then more importantly too, or what I think more importantly, where was this at? What was it doing when the market has topped in the past? When we've been in these quote unquote capitulation phases like people think we are in currently, where has the market been at? Or where has others BTC been at? Consistently moving down after an explosive move to the upside, after a rounded top, after pulling back down, right? Kind of dead cat bouncing in here. And this is very, very clearly, again, just not where I see us within the cycle. All right, now moving on to some more macro charts. These charts are kind of unrelated to crypto, but do have implications for the stock market as well as crypto. These are not cycle by cycle kind of charts like we showed in the last three, where I pull up Bitcoin's chart and say, well, let's look at where we're at in past cycles. So it'll take a little bit more explaining on these, but hopefully you guys do see my point. I believe, I don't know if we covered in a long form video, but we definitely have in a short form video, Japanese yen to US dollar. If you guys are unfamiliar with what this chart means and the implications behind this, as the Japanese yen is moving down, people are able to borrow against a cheaper yen. People are able to, or Japan is purchasing US treasuries. All these things are happening, right? I don't want to dive too far into the implications or the reasoning behind this chart. But basically, when we see this chart move down, this means liquidity is being brought into broader markets, American markets specifically and especially. And a couple times over the cycle, we have experienced something, I'm sure you guys have heard it, the Japanese carry trade. Or when we get to these elevated points, sorry guys, I actually had this backwards. When we get to these lower points in here, sometimes I'll look at US dollar price and Japanese yen. But when we get to these lower points in here, a lot of people get fearful of some sort of yen carry trade unfolding, things like that. Bank of Japan step in and things like that, where we do see some sort of intervention. When we do get that intervention, price typically moves up, Japanese yen to US dollars. And this can actually end up hurting the markets. What I do want to point out is we have not had any intervention yet. We've been down here for 1, 2, 3, 4 months. We've actually crossed bearish on the monthly time frame. Japan just had their elections. Trump's pick, or Trump's, kind of friend, did get elected. So I would imagine there's probably some say as to, not hurting American markets. And it also has an effect on their own markets. Okay, so if we pulled up the Nikkei right now, Nikkei has been doing very, very well. It's been making new all-time highs. And one thing a lot of people do not talk about is this move down, this weakness in the yen is actually, or has actually been through fiscal spending by the government itself, and not overextending its lending from Bank of Japan. So Bank of Japan really can't do anything to stop this train, even with intervention, because they already have intervened 2 times. This is coming from the fiscal side. We do have a bearish cross in here, signaling some stronger momentum, right? Bearish regime on the monthly time frame. If this thing ends up crossing down, whether that be from excessive fiscal spending from Japan or Bank of Japan not intervening, I would anticipate that being very good for markets. Something that is also on the table in here is a joint intervention from the Fed as well as the Bank of Japan. If you guys are interested in like an interesting history lesson, you can look up Plaza Accord, or 1985 Plaza Accord. That was one of the last times we had joint intervention. And what this involves, okay, so typically the yen carry trade is very scary because Japan starts selling off their bonds, their US bonds, right? They sell those off, right? They get US dollars back for those, and they inject those US dollars into the yen. This would in turn strengthen the yen, but cause a lot of instability in our bond market, which is something that on the macro level is not good for asset prices. But what this joint intervention would cause, or what this joint intervention would do, is to prevent the impact of Japan, again, selling these bonds. The Treasury would actually be selling US dollars to buy Japanese yen. So the Bank of Japan isn't going to have to sell off these bonds. All right. And what are we going to see is a weaker dollar with, yes, we are going to get a little bit stronger yen, but we're also going to get a much weaker dollar. What do we know is good for the market? A weak dollar is always going to be good for any market, causes inflation, puts liquidity in the system. So Japan would still be able to, carry trade would still be able to take place while we were having weakness in the US dollar, versus the carry trade still taking place, but Japan selling off American bonds is kind of the idea around this. This one currently, to me, it's bullish. I don't think when we look at everything kind of together, we've already had Japan intervened twice, and again, this time being on the fiscal side, potential joint intervention crossover on the monthly time frame. I think this one will actually work out in our favor, but definitely one to kind of look out for because it can actually turn bearish relatively quickly. All right, another one to look at. This is very simple. This is the Dow Jones. Dow Jones is making a new or made a new all-time high just this last week. Over the last few months, each month has kind of moved higher. So a lot of people are complaining about stocks or this or that, and we'll cover it in other videos this week, being crybabies about Mag 7 stocks potentially not doing as well. But the stock market as a whole, and when we look at each indice, right, is doing rather well in my opinion. Dow Jones, new all-time high to close out the week last week. Not really anything to be overly bearish about, in my opinion. And again, we'll cover the stock market more in depth in its own video this week. But just something I wanted to point out, throw into this video as well. In line with Dow Jones, we have the Russell 2000. We've been covering this for what seems like forever now. This is all the way back into September 25. When we started eyeing this breakout, we got absolutely chopped to death. We've broken out since then. Russell 2000 doing well. It's always going to be a good sign that there's extra liquidity in the system. On the weekly time frame, in my opinion, nothing to worry about at all. No kind of bearish divergences to show up in here. I did have this potential resistance level plotted on here for a long time, really since back in here. We got into it. We've been kind of chopping around, but in lockstep with the Dow Jones having a nice move higher last week. And when we look on the monthly time frame, same thing, monthly momentum, nothing to worry about. Once it's cleared this all-time high and actually started getting a push up, has been rather nice. So again, contrary to what most people would say, stocks, in my opinion, are not overly bearish currently. Now, everybody's favorite chart, we have gold. We talked about this, we covered in other videos. I'm not going to dive into it super far in this video this week, but gold potentially finding a top at the 4.236 to 4.618 fib extension. I personally do not hold assets past these fib extensions when I have a clean read like this. When we look on the monthly time frame, kind of slowing down, but nothing rolling over quite yet. I don't want to try to fit my bias here. Weekly time frame, not great candles when it comes to how this looks, but nothing quite rolling over here. And then daily time frame has somewhat started to roll over, in my opinion. And then it being at these fib extensions is kind of another clue of what could come next, being some sort of larger pullback in gold, some chop. How low this thing needs to go or whatever it needs to do is yet to be determined. We don't have enough data, but getting this initial pullback in gold, getting this kind of parabolic move to settle down a little bit is going to be good for broader markets. We covered that in other videos. We also covered the fact that, hey, gold going on these parabolic rises is actually a prerequisite to some of the best risk on rallies in history. All right. And a lot of people have gotten fear-mongered into going into a risk-off asset or a typical risk-off asset while we are about to go risk-on. Once gold gets into this kind of speculative bubble zone, again, it's one of the first movers, or has been, to lead the way of, hey, this is going to be a rather risk-on rally. This is going to move us into risk-on times. And we have other charts to act as confluence for that. I tend to give it a lot of validity in my thesis, right? I apologize if this is one of your first videos that you're actually watching, but we have to cover a lot of charts here, so we are going to kind of zip through these. All right, next up when it comes to charts on the bullish side, sorry, I'm looking at my notes here, but we have Bitcoin pulled up with RSI. The main focus here is going to be RSI. You can see we've gotten down to these levels that we have typically seen and been able to find bottoms in past cycles. This chart needs a little bit more explaining on what this can mean for this actual cycle, if you would want to call it. You guys should know by now, I don't personally believe we are in a bear market. I do think this is all a part of one single cycle, and people aren't going to believe me right now. People aren't going to see it, even if we make new all-time highs in the coming months or this year. People aren't going to see it as such, but it'll make a lot more sense when we get into the next bear market. I think people will realize, oh shit, like this guy actually knew what he was talking about, and he was right. But regardless, just speaking on this for this video specifically, right, when I say bullish, yes, obviously bearish times to get down in here, but now that we're down in here, if we look at past cycles, right, this is where we're able to find a bottom. This is where we found a bottom. This is where we did have a little pause out here before we went into capitulation with this weekly bull div, potential bottom forming in here as well, getting back down into those levels. I believe the 3-day time frame was actually one of the most oversold times in history. Yeah. So it looks like the only time we got lower than this was in the November or 2018 cycle. We actually did get this move down in here. But you can see any move down to these levels on the 3-day has historically meant reversal is coming. Now, again, there is some nuance to these charts and RSI and stuff like that, which I do think we cover in other videos this week, but I'm just trying to show you, present to you guys the bullish side of things, or the bull takes on a few charts, as well as we'll dive into the bear takes too. All right, guys, let me take my indicators off here. I think that should be good. The other one, or the other chart that we were looking at, this was one we were just looking at just last week, but high yield corporate credit. Again, not going to dive into these things on a deeper level, but every single past cycle, when we've been finding a top or have found a top, we've seen this thing rolling over, and not just rolling over, but front running by months. Okay, I guess I kind of do have to pull up Bitcoin's chart here so I can show you guys. This credit market, $120 trillion market, some of the smartest money in the world, biggest money in the world. If this thing is rolling over, right, they've been able to front run where Bitcoin and equities have found a top cycle after cycle after cycle. All right, if we look at where we were at when we capitulated last cycle, or when we capitulated in 2018, right, you can see this thing was already on a massive drawdown. Okay, not the case this cycle, completely different. When we look at when we even had found the top, when we had found the top in here, this thing was already starting to move down. When we were in that January of 2022 style fractal that everybody says we were just in and moved out of, right, this thing had already rolled over. Same thing back here. Once Bitcoin had found its top and moved down, this thing had already rolled over. Kernel regression band had already flipped red on the monthly time frame, guys. And this is just something that we have not seen show up. Okay, so if credit is not pricing in tougher times, if credit is not pricing in a bear market, I, for one, am not going to be pricing in a bear market either. All right, sticking in line with corporate credit or high yield corporate credit. Let me take off this daily open in here. This is high yield corporate credit spreads. When this spread widens, it means investors, credit investors, need a larger premium for taking on said risky credits. Why would they need a larger premium? Well, it's too risky to be taking on that credit. It's not an overly liquid time in the market. It's not a overly risk on time in the market. And we can see in past cycles, again, once we've kind of had this thing cross up on momentum, I talked about this in videos last week. Once we had this thing cross up, right, it typically meant we were at that kind of capitulation phase, right? Again, these are where our charts are pointing to when we look at RSI, when we look at, what people are claiming the structure is and things like that. This is where people say we are, but it has yet to show up on these spreads as well, in combination with where the actual high yield corporate credit is when we look at charts like HYG. Okay, so we have not seen these things expand out yet, and still relatively subdued in my opinion. Next chart is the 2-year to 10-year yield. If you guys have heard people say, oh, we have an inverted yield curve, we have this yield curve, this, that, uninverted yield curve, that's what this chart is talking about. Okay. All it means is you want your longer dated yields, bonds, to have a higher premium, have a higher return, have a higher, what am I trying to say? Interest rate, essentially, or rate, than your lower term or your lower length bonds. Think about it, if somebody's like, hey, can I borrow $10 and I'll pay you back in 30 years, versus if they're like, hey, can I borrow $10 and I'll pay you back in 2 months, you're probably going to charge less interest for that 2-month loan than you would. You're like, okay, if it's $10 in 30 years, I'm going to need 4 or 5% interest versus 1, 2, 3% interest. What people talk about in the market and things like that is how steep this yield curve is. Is it, above, is it not inverted, at below zero and things like that. In past cycles, we've seen this thing declining. So what is this in here? This is where we topped out in 2018, right? This thing had already been kind of shrinking and continued to shrink after that, meaning that yield curve, that spread, was shrinking as well. We are actually the steepest we have ever been, or have been, since 2022, and this thing continues to move up. As this thing moves up, it just signifies healthier bond markets, things of that nature. All right, next up, Bitcoin on the whatever time frame, weekly, monthly, whatever. But one thing I just want to point out, one thing that I find super interesting, again, everybody points to, hey, we're in some type of we're just following this last cycle verbatim, step for step, right? Pointing to, pointing to these different levels, pointing to, being in these different ranges and things like that. I suppose I should go down to the weekly time frame. Okay. People were pointing to being somewhere like this just last week, right? Some being somewhere right there. And then now people pointing to, hey, size shows capitulation. We're just going to kind of chop around in here until October, and we're going to follow the 4-year cycle just like every other time. I kind of have an issue with that for a few reasons. One of them being, and what we'll point out in this video, is you can see here last cycle, again, if we're pointing to when that capitulation came in, because people are saying this is capitulation, 217 days. And I don't want to cheat here. Let's say we even go a little bit lower than this, 217 days from the top to capitulation. We are currently at 120 days. So a part of what makes a bear market so painful is the length of time, is how long you stay down there, how long prices stay suppressed, all these things. For it to just be over in 120 days, 4 months, is pretty insane in my opinion. Like I said, even if we go longer, if we go to 217 days, this thing, we just followed it to a T. This capitulation, right, to get to this point where we were breaking below these levels wouldn't have happened until beginning of May. Okay, we did it beginning of February. So big difference in that. Just kind of something I wanted to point out. This one, or this topic, or this kind of idea is something that we'll cover more extensively in other videos. I just wanted to point that out as well. And we can even look at past cycles too, just to give you guys an example. How long did it take to get to this capitulation zone? 365 days, typical bear market there. How long did it take to get to capitulation in here? 413 days. So you guys can see the drawdown, right? The percentage drawdown one, that's completely different this time around. 75% there versus 54, 53% in here. But the other thing that's important besides the actual drawdown itself is the length of time that it gets there, because people also capitulate based on time. Time-based capitulation is definitely a thing, but kind of just a little bit of a difference, and we'll talk about that in other videos this week. That's something I wanted to point out, and this is actually on the bullish side, in my opinion, because this looks rather different than previous bear cycles. All right, on the bullish side of things, if you are somebody who is a CME gap has to be filled kind of person, well, all the CME gaps are currently above us. Does that mean we just peak that and then go down? Again, you guys make your own opinions on this stuff. I'm simply relaying the data, but we do have 3 CME gaps above us, one being all the way up at $98,000, which I do definitely find interesting. And this is also happening while all of the liquidity is above us as well. When we look at all Bitcoin across all exchanges, where the liquidity lies, right? We have, some like 25, $30 billion of liquidity to the upside. And then down to 50,000, we have $1.3 billion in liquidity. So market makers do have a reason to move price up here, even outside of what we've been covering in these charts and things like that. So that is something that I definitely wanted to point out and something I find interesting. All right, similar situation when we look at the heat map itself, down to $54,000. This is just on Binance. Down to $54,000, we have $365 million in contracts. At 98 or up to $98,000, we have 5 billion. Up to 126K, we have 11 billion. I suppose while we're here, we can look at everything across all exchanges as well. We're seeing very similar things. This doesn't aggregate total amount, but you guys can see the levels on there and then the levels below. All right, we've also covered this in past videos, so do make sure you go check out my videos from last week. But what we have here is non-farm payrolls. We've indicated that getting below this level, getting below this zero line, has historically not been a very good thing for markets. And market out on the Dow Jones here as well has not been a very good thing for markets. And the last 2 recessions, major recessions that have come in, have happened when non-farm payrolls have reached below this level. One thing that you do need to know, because there is nuance to this always, is you need to know where the Fed or what position the Fed is currently in. You guys should know the Fed has a dual mandate. They say this every single video. We have a dual mandate of inflation and employment. Currently, the risk is fully on the employment side. We just had ADP come out, which is another kind of payroll indicator or measurement that comes out, and it came in drastically under estimations, kind of alluding to the fact that, hey, like I said, The risk is on the employment side. What does this mean the Fed is going to do? The Fed is going to absolutely slam rates. The Fed is going to cut rates harder than you've ever seen them cut before, in my opinion, despite what people think about Kevin Warsh, despite if people think he's hawkish or something like that. The Fed does not navigate one of the toughest times in financial history ever, being COVID, with the risk was on the employment side as well as the inflation side. Navigating that whole situation, hats off to them. They do not properly navigate that entire situation just to keep rates way too high for way too long and have us basically artificially go into a bear market, in my opinion. And then this is a macro bear market, recession type territory. So what does this mean? In my opinion, the Fed is very, very, very clearly about to start cutting the living hell out of rates. Again, this is on the bullish kind of side of the charts for now. Typically, I do hold the stance that once the Fed starts cutting a little bit too drastically, that's actually where you can find a top in the market. So we will likely come back to this or similar charts once the Fed has cut rates and inflation probably has gotten out of hand. But that is not the current situation, as inflation that I've shown has been rather subdued. All right, and I mentioned I was going to talk about bearish charts. So what are the bearish charts in crypto and in the macro? And again, this is my honest opinion, guys. This is just the reality of the situation. I'm really not trying to be biased here. I wish I could just be an extreme bear. I wish I could be on the bear side. I wish I could be like, hey, we're going to get to DCA lower. We're going to get to do this. We're going to get to do that. But honestly, in my opinion, it's just not the case currently. It's not what the data is showing. And I have to follow the data. Trust me, every single week, week after week, get absolutely ridiculed. You're such an idiot, this and that. Trust me, I would get way more views. People would be way happier with me if I could just simply get on here and bear post. But until the data shows that to me on a macro level, I'm a macro investor. I buy the cycle bottom, I sell the cycle top. It's as simple as that. And until I see signs of the actual top, until I see signs that we're in an actual bear market, I simply have to keep doing what I'm doing here, and that is bull posting. On the bearish side of things, we have two things. We have 4-year cycle, bro. We topped out Q4 2026. We topped out October 6th, just as the prophecy of the 4-year cycle foretold. I've covered that I do not believe in the 4-year cycle for other reasons, but I find that interesting. So that is what people are saying. So I have to show it. On the bear side, we have 4-year cycle coming to a close. Within the 4-year cycle, there is issues, larger issues on, again, we kind of covered it in this video of like, okay, this was extremely fast, how quickly we got down to capitulation, but we'll try to be unbiased here. The other side for the bear case is that Bitcoin's price is down. Thank you for stating the obvious, bears. Bitcoin's price is down. I appreciate that so much. That's very insightful on where the market is going to go next and what the dynamics at play here are. Thank you for telling me that Bitcoin's price is down 50% over the last 4 or 5 months. I definitely did not notice that every single time I opened my ledger or every single time I looked at Coinbase. And that's really it. That is the only bear case, or the only bear cases I can find in crypto currently. Even within this whole 4-year cycle thing, like we pointed to at the beginning of this video with ETH BTC, others BTC, Bitcoin dominance in completely different places. Okay, so to me, the real only bear case that people have is they're in pain. They either believe in the 4-year cycle or they're in pain because Bitcoin is down 4 or 50% over the last couple months. I'm not trying to be a dick to bears. If you guys can show me more bearish charts, I welcome it. Please, please, please. I've been fighting. I've been trying to see the bear side. I've been trying to get somebody to present to me some sort of data outside of 4-year cycle, bro, and look at Bitcoin's price. I have yet to have anybody present anything to me. So if you guys can, in my comments, bear pill me. Get me on the bear side. I would absolutely love that. But it's just not how I see it. It's not where I see a lot of the charts pointing to. And I haven't had anybody be able to rebuttal me otherwise. So we'll go ahead and wrap it up here. This is an extremely long video. Let me know what you guys think in the comments. Make sure you check out my other videos this week, as well as go back and look at my videos last week. Those videos last week are very, very important for understanding the more macro picture, the credit cycle, like we alluded to in this video. And yeah, I appreciate you guys as always. Link in my bio for my free Discord. I'll catch you guys in the next one. Peace.